Banking sector which is coming under the service sector, which is nothing but we are majorly identify which is related to the financial product. Any person having a surplus, they want to select a right instrument for generating a more revenue, so the bankers are giving a more guidelines. As the commercial bank offer wide range of service, they are not only unique service provider. The primary objective of investment banking is to help a client raise capital. Hello everyone, a warm welcome to one and all. I am Natesh, lecturer in commerce, Vidhyaashram First Grade College, MYSURU, the Temple of Excellence. We are in the Unit 1, Session 1, second semester, Law and Practice of Banking, BCom, Introductions to Banking. And today my agenda, introductions to banking and the origin of banking, how the bank is started, and the evaluation of banking, because we know there are different century, how it is evaluated, and the meaning of banking, and there is standard definition of banking, and the commercial bank, the under classification of bank, the first commercial bank, and investment and industrial bank, moving forward one by one. So in the introduction section, the first unit, which is the basic concept introductions of banking, you must be well familiar with the banking, what exactly. So which is nothing but the banking is collecting a deposit and lending a loan for the needy people. Here the bank is a financial service, because a banking sector which is coming under the service sector, which is nothing but we are majorly identify which is related to the financial product. So the banking is a financial service that deal with the acceptance. Acceptance means because as a customer, the bankers are starting with the intentions to accept the deposit from the customer. The customers can be your individual or bankers, or you can say for the government, or industry or businessman. So you're lending and safeguarding of money, because whenever they are trying to collect or accepting a deposit from the customer, so when you are keeping your money as an individual, you're keeping your money in the bank, which is 100% you are getting a safety. So that is, and the bank is playing a crucial role, because the crucial role, what kind of role they are trying to adapt in the economy, because when the individual people, when they are not depositing, they are keeping in their home only. So here the mobilization, the money mobilizations, we are not able to identify. So that's what economic is, which is completely depending on the money flow or capital requirement. So when the bankers are pooling money from the customer, so of course, which is completely based on the economical conditions. So by providing a financial service, as an individual person, when they are depositing money which is used for the different purpose, so that's what the economical major problem or industry, or those who are require finance service to individual and business or government. So the banker is a agent. Now customer, we identified here individual customer or business also having a current account, even the government also a customer. And the primary functions of a bank is to accept deposit. Those people, either individual, business or government, they are accepting a deposit from the customers, from a customer, and use those deposit to make loan to other customer, because there are different types of customers we are identifying, different purpose they want finance support. So they can get a facility from the bank, either which is a short-term loan or long-term loan or medium-term loan or industrial loan. There are different types of loan are offered by the bankers. Moving forward, and now you will get to know the origin of bank, how it is started, where it is a base. So the origin of banking can be traced back to ancient civilization such as Mesopotamian, who use the clay tablet to record the transaction, because which is starting from the origin which is identified ancient period or civilization Mesopotamian. Okay, so they are using for the customer whenever they are depositing. Okay, so which is using a clay table tablets, they are recording the transaction, withdraw, deposit or transaction. Okay, the first modern bank emerged in Italy. Okay, the modern bank. Now we are not trying to go for comparing with the traditional bank which is started from the Mesopotamia. Now modern bank, first modern bank which is identified in the Italy during the Renaissance period with the Medici Bank. Okay, which is, you have to remember this point, Medici Bank, which is located in the Italy. So being the most famous now, so the Medici Bank was founded in the Florence of 1397, which is founded and become one of the most successful bank of that time, because everybody are now trying to go for modernizing. So when you are trying to go comparing with the tradition, now modern bank is which is located in the Italy, and the name is called for Medici Bank. So the success of the Medici Bank inspire other European country. Okay, now the modern bank is started in the Italy. Okay, so now it is going for the other European country to establish their own banking system. The same Medici Bank is establishing in the different European country. So call it as a Medici Bank for the same banking system. How it is operating in Italy, the same system is operating in other European country also. And the evaluation of bank, how it is evaluated. Okay, so the first, the banking industry has undergone significant change over a century. But a big 16th century, 13th century, 17th century, they different century we are identified. So here the driven by the advance in technology, change in the regulation and shift in the consumer behavior, because lot of changes we are identified. Okay, so in the 19th century, the bank began to issue paper currency. Okay, here they introduce the paper currency and develop other modern system of check processing. So which is completely for the processing is going, number of the process will increasing here. So the earlier 20th century saw the rise of commercial bank. Now, which is now earlier 20th century, the commercial bank was slowly increasing. So, which focus on the providing loan to the business. The main focus on the providing a loan to the business. Those who are interested to start your business, those who want to financial assistance. So, in the commercial bank, they are getting for commercial activity for loan. So in the later half of the 20th century, exactly 20th century, bank began to expand their service to include investment banking. Here we find only for providing a loan for commercial activity or business purpose. Here which is extend for the investment banking. So those who are really interested to go for investing, insurance company, share market. Okay, so here the bankers are trying to go for getting an advice from the banker. The customers are getting a more advanced benefit. And asset management, everybody or every businessman, even wealth maximization, asset, how they want to manage. So in this, and the other financial service like a credit card, what kind of facility we are identifying the modern banking system, loan, short period loan, credit card, debit card, internet banking, everything which is related to the financial services given by the bankers. In 20th century, has seen further change in the banking industry. Again, we identify there are lot of improvement. So with the rise of online banking, now 21st century, everybody is getting benefit from the using a online platform. Even the banking sector also, they are trying to adapt in the complete online system. So with online banking, mobile banking and other digital survey, so the customer, they can review or they can view the transaction, whatever happening, they can check the minimum balance, they can check the balance, whatever the transaction. Okay, either they want to transfer money to one person to another person, so using a digital platform. So now exactly the meaning of banking, there are different meanings we identify, but the basic concept which is completely, so it involves wide range of activity. The banking is not dealing only for one kind of transaction, one activity. So they are providing their wide range of activities we are identified as a customer, including accepting deposit from the customer and the making loan, whatever they collected deposit from the customer, they are trying to lend for the loan for the different reason, different purpose. They are lending a loan, a short period, medium period, long period. So individual personal loan, education loan, industrial loan, business loan. There are too many loans we are identified. And providing a financial advice, for example, the company, they are trying to go for acquiring a similar business, okay, so which is nothing but the merger and acquisition. That time they need finance support, they can get an advice from the banking. And managing investment, they want to manage, for example, any person having a surplus, they want to select a right instrument for generating a more revenue. So the bankers are giving a more guidelines. The term banker can refers to specific financial institution. The bank is coming under the financial institution, the specific term that provide this service. There are too many service we are identified. The customers are getting, because we are standing in the 21st century. And it can refers to the broader banking industry as a whole, because in the different city, different state, nation-wise or country-wise, when you are trying to find out, so within sitting in your same home country, home city, you are trying to transfer for other city or other country. So we are getting a lot of benefit using a digital platform. Moving forward for next topic. So here the definition, you will, in the last slide, you got an idea about the banking meaning. There is standard definition, because the banking is controlled by the Banking Regulator Act. So here the Banking Regulation Act, BRA shortly, in the which is introduced, amended, passed by 1949, you must remember. So it is a law which is related to banking, because the subject, the name only, law and practice of banking. So the standard definition, Banking Regulation Act 1949, is a law that regulates the functioning of bank in India. So we are trying to follow the Indian government rules and regulation which is passed for the banking. Okay, so according to the BRA for 1949, the banking definition of banking is definition of banking is follow. So what exactly the definition? Banking means the accepting. They are accepting a deposit from the customer for the purpose of lending and investment, of depositing money from public. So the public, whatever they deposit, opening an account, okay, that whatever they accept a deposit from the customer, so the intentions to lend money, intention to give loan, or providing a loan facility for needy people, or go for investing to generate more revenue for the purpose of generating a revenue. Because when the customers are depositing money, the bankers want to provide interest. So same thing, the bankers want to generate interest, so they want to go for investing. Repay on the demand, and otherwise withdrawal by check, draft, order, otherwise. Now customer, whenever they want to withdraw money using a negotiable instrument, like a promissory negotiable instrument called a check, okay, so using the instrument, they try to go for withdraw money whenever they want. So here, now the first, according to your syllabus, the classification of bank, which is starting from the commercial bank, the commercial, which is nothing but the commercial activity, business and industry, which is coming under commercial activity. So here, the first you will get more clarity about the meaning. So the commercial bank is a financial institution. Everything is a financial institution when you're talking related to banking. So that provide a range of financial service to individual person, okay, those who are having a saving account, or businessman having a current account, or government, okay, so these people, okay, they are nothing but the bankers' customers, the commercial bank customer. So entity. The service may include accepting deposit. Commercial bank also accepting a deposit from the individual, business and government, and providing loan, because whenever the bank are collecting a deposit, they need to lend money for the needy people whenever they want, okay, based on the requirement. So the bankers are providing a loan facility and providing loan and issuing a credit card. The commercial bank also offering too many benefits for the customers. So credit facility, international transaction, for example, the transaction in between country to country, either individual, business or government. So using an international transaction, they are getting a benefit. Okay, and managing investment. As an ordinary people, they don't know how to invest. So in that case, definitely they try to go for getting a more clarity about the investment. Okay, so now objective. The primary objective of commercial bank, it is to earn profit. Because every businessman, they are earning either which is a physical product or service product, with the intentions to earn profit only. So you are providing a financial service to the client. Client is nothing but your customer. Okay, whatever they're collecting a deposit, because the bankers want to start generating a profit, of course they want to lend money, providing a loan facility to other people. Okay, so to achieve this objective, the commercial bank engage in various activity they want to engage. So not only for providing one specific purpose of loan. So various activity, lending money, they are providing a loan facility, short period, long period, like that. So investing security. So the bankers are investing into the security like a share market or insurance company or mutual fund. Then only they start generating a revenue. So the charging fees for their survey, the bank are not providing a free of service. They are providing with the intentions to getting returns like charges there. For example, the customers are having a debit card. The bankers are charging for the maintenance charges for the debit card, credit card, loan, overdraft facility. So everything they are charging. The main scope. The scope of commercial banking is quite broad, because the scope what we are identifying, which is very similar to importance. As the commercial bank offer wide range of service, they are not only unique service provider. They are trying to go for multiple service facilities are provided. So wide range of service is given. Like bankers to customer, bankers to bank, bankers to business, bankers to government, bankers to international. So like this service, what and all the major services we identify. One is accepting deposit from the individual, businessman, government, or other banking, okay, and providing loan with the intentions, whatever they collected deposit, they're providing a loan for different reasons or different purpose. Okay, so issuing a credit card. Okay, now apart from the debit card, there is a lot of demand for the credit card, which is a plastic money. We can say plastic money, and the facilitating international transaction. If they want to do for exchange, currency exchange, or dealing with other country, or getting from other country any equipment or raw material, so which is nothing but the international transaction. Okay. So moving for the investment and industrial bank. Investment, the name only suggesting the invest, which is going for only for investment. But industrial bank, which is related to only for industry, the specific, there are set of industry are located. So the first we will get to know the meaning of investment as well as industry. So investment bank is a financial institution. Everywhere we are finding a common word, like common sentence, common word, financial institution that help to corporation and government raise capital by underwriting and issuing a security. Underwriting, which is related to insurance policy or setting a premium, okay, and issuing security. So next, industrial bank means, on the other hand, the institution that provide loan to business, because they are starting, which is they are coming under the business. Industry is located, okay, based on the business only. So, and the corporation. So those who want to start industry, the industrial bank are providing a loan facility for the multiple reasons. They often specialize providing financial for specific industry. For example, the industry loan is only sanctioned for the small scale industry or any manufacturing sector or software industry. So whatever which is related to specifically they specified. Objective. The primary objective of investment banking is to help a client raise capital. Help, because the client, they want to go for investing. Now whenever they try to go for investing, raising capital is very important, okay, and manage their financial risk. So if you try to go for investing any specific financial product like share market, bond, debenture, okay, so major risk, the risk can be managed by the investment bank. So industrial bank objective, on the other hand, focus providing financing to the business. The main objective is nothing but a business loan which is related to starting an industry. So that need to capital. Any businessman, if they want to start any new business or they want to extend any branches or unit, they need to depend on the financial resource and to grow and expand their operation. Now they started only one unit. They are future, they try to extend one more branch or number of units they want to. So that time they need to finance, they need to raise the finance. So of course the industrial bank are providing a financial support. So the scope, investment bank have a wide scope of operation, not only for only one specific purpose, okay. So wide scope of operation, as they work with the range of client, number of clients are located, identified in the investment concept. Either individual person can go for investing, or businessman can go for investment, or government can be going for investment. Okay, so across different industry and sector, the major investment sectors like insurance, mutual fund, share, government security or private investment, so whatever the foreign direct investment. So industrial bank on the other hand tend to have a more focused scope as they specialize in providing a finance to the specific industry or type of business. So there are different industry bank are located, started or established for the purpose of specific financing only. Keep on watch for next section. Thank you.